Hey all, welcome to ShareTreck. This is Friday, the 24th of June, 2022. And the markets are still looking good. There is a little bit of bullish overhang from yesterday. So let's go and take a look at what's going to happen in the market today. Well, let's start off with a childhood story that we might have heard when we were in kindergarten or something like that. It's a story of a blind man and the elephant trying to describe what an elephant looks like. Someone says that the elephant is like a rope because they are touching the tail and they think that the elephant is like a rope. The other one is looking at the legs. I mean, they are touching the legs and they think that elephant is like a big pillar. So you get the drift, like different people have different points of view, and the stock market is as big as an elephant. And today I just want to demonstrate to you the fact that nobody knows where the market is going to go. Everybody is looking at it from their vantage point. And also when retail investors try to look at articles that are given in reputed magazines and popular websites, they are buying into those one-dimensional views. So I insist that every investor, especially retail investors, should start doing a lot of their own analysis, try to understand the macroeconomics, try to understand all the factors that are influencing the market before you put your hard-earned money, because the losses that could accrue are pretty damaging. So to illustrate this point, I have got three headlines today that I'm going to show you from markets.businessinsider.com. And these three articles came out yesterday, and all three are talking about three different points of view. And they are contradictory to a great extent to each other. So let us go through the article one by one very quickly before we go and look at Nasdaq. The first article says the US economy is poised for a strong second half of 2022 as the US economy avoids a recession and inflation gets cut in half, JP Morgan says. So these are the three key points. JP Morgan says the stock market is primed for strong returns in the second half of 2022. Surprises, we are already in the second half of 22 and we have seen 3 or 4 bullish days already. The bank expects the annualized inflation rate to get cut in half over the next few months. I think that is possible. I don't know if it can be cut into half, but definitely it is going to show a downward trend because of all the interest rate hikes and demand destruction. It said falling inflation would let central banks pivot and avoid producing an economic downturn. So this is what JP Morgan is expecting. Now, contrast that with this article, which also came out in the same day. The article says the stock market could be primed for a few lost years ahead. It also says the Wall Street quant firm highlighted that average stock market returns have been elevated over the past decade. I agree with that. And they recommend stock market traders use options if a sideways market materializes. This is from the same website, markets.businessinsider.com, on the same day. So the headline here says retail traders haven't given up on the stock market, and that could mean it has to fall further. Now, this totally contradicts the very first article we had where JP Morgan was saying the second half is going to be bullish and we could make some money out there. So if capitulation has not happened yet, and we are already on the 24th of June, we are in the second half, we are almost at the end of the first month. JP Morgan would actually have been more accurate to say that we'll have a bull market in the fourth quarter. That would have been much more accurate because in the second half, we have already gone through the first month of the third quarter. So this is just a highlight of what I think we need to realize as retail investors. Google will provide you confirmation bias. So be very careful how you search and what you look at. So that's my message. And also, please remember, the fear and greed index is still reading extreme fear. It's at 23. So this means that you got to be careful. Volatility is still there. It's a very dangerous market. Having said that, let's go and have a look at our genomic stocks. Let's start off by looking at the Nasdaq futures first. Nasdaq futures is up 0.81%. And as you can see, we have this diagonal red line of resistance. And I'm feeling very strongly that we are going to push down from this resistance and come back down and be in this bearish track because of various factors. First of all, the Russia-Ukraine crisis is not resolved. And the Russia-Ukraine crisis is a catalyst for something worse than recession, that is stagflation. So that said, I don't think we are in for a bull run as such. These are all bear market rallies, and we have had a decent rally. Now it's time is overdue for us to come down. That is my opinion. Please put in the comments what you think is going to happen. We have a line of support at the bottom out here. This is going to perform the role of a support in my opinion. And if we look at the market situation, the market is already open and we are up 0.79% so far. I think the bull market is fizzling out. The bull rally is fizzling out, and we are going to see the turnaround. And also remember, today it's Friday and the options expiries will take place. We might probably see some move downward. That's my opinion. But right now, the future indicates a slightly bullish open. Indicators, well, let us go and look at the US oil. US oil has gone up a little bit, but I'm pretty sure that we are going to bounce down from this 107.52. We'll also remember that Europe is still having an oil issue, and they are going to implement the oil embargo with Russia somewhere before the end of this year. So they have got another 5 months left, so they are actively looking for other alternatives. You will also recollect that the US gas plant fire has set back the ability of US to send gas to Europe. So those pressures do remain, but at the same time, you are looking at demand destruction happening in US in a very big way, with every 75 basis point increase in interest rates brought about by the Fed. And also, I'm going to talk to you about one more chart out here, USD Japanese yen. Now, this is going to come into play very soon because this there is a bullish track out here for US dollar against the Japanese yen. Let me draw this out here and make this a green channel. So we have a level of 140, which experts say is going to be the point at which Japanese yen is going to turn around because Japan is an importer of all raw materials and exporter of finished products. So while its finished products will appear cheaper to various purchasers, its imports are becoming increasingly expensive. Therefore, it has to increase the price for its products. And that becomes a problem with exports. And therefore, what's going to happen is Japan will have to step in, Bank of Japan will have to step in and start issuing bonds to mop up the yen supply and bring down the exchange rate so that the yen can firm up a little bit. So they are just, they had been almost very close to that at 136.68 somewhere on the 22nd of June 2022. But anytime soon, if they follow this bull track, they are going to be within stone's throw of 140. When that happens, if Japan starts issuing bonds and taking cash out of the market, then there is going to be further liquidity crunch. And then if we go to the US dollar index and see, right now you can see US dollar index is absolutely range bound with very minimal gains. There's a bit of a fluctuation here and there. So what's going to happen is that instead of money going from US dollar into gold and stock market and other places, now it has one more contender, that is Japan, because the funds are going to be pulled in there. And also remember, European Central Bank is increasing interest rates and tightening its balance sheet. And Fed Chairman Powell had already mentioned that he would be soon starting to sell mortgage-backed securities. It's going to destroy demand further because the housing market is going to be affected big time when that happens. So with all these headwinds staring the oil market, the fear for most oil producers is that there is going to be so much of demand destruction that people are going to stop buying stuff. and therefore manufacturing activity will ramp down, and therefore use of oil is going to go down. And so in anticipation of that, oil prices are falling, and I'm expecting it to move towards 95.08 in the near term, because markets are always forward looking. 10-year yields are slightly going up, but they are within yesterday's range, and they're also being constrained by the 20-day exponential moving average, which is sitting at 3.117%. We are right now at 3.126%. So we are handling the 20-day exponential moving average out here. But as the yields start falling, it indicates that the money is going back into bonds, because the bond prices will go up and the yields will look smaller. So right now it is a bit bullish for the stocks, but since it's within yesterday's range, I think I'm going to consider this as neutral for the market right now. And having said that, I would like to go and look at XLY, XLP. And the point I would like to make here is that I am of the opinion that smart traders are moving in and out of discretionary and staples, and they are trying to recover some money out of the market in this process. Because if we were to zoom out and look at the bigger picture, we have a line of support out here, a trend line that if I was to draw this way, we have a trend line out here which is supporting us, and this particular trend line has says that we still have a little bit to fall, and this has got 1, 2, 3, 4 touch points. So we still have space to fall as far as XLY, XLP is concerned. When this falls, that means we are moving away from growth, and when this goes up, that means we are moving into growth. So there is still potential for the market to fall before it can come up, and that's the reason why I think that we are still in a bear market. And if we were to go into QQQ and have a look at QQQ, you will see that we are still in a big downward trend. This is a bear channel that we have. I'm going to color this as red so that it's clear that it's a resistance. And each of the candles here is a one-day candle. I'm going to zoom in further. So as you can see, we have got unusual drop out here with huge gaps. Now we have recovered this gap already, but there is one more gap left to recover. So there will be an upward pressure for Nasdaq to recover that gap. But I don't think it's going to happen right now, because if it had to happen, it would have happened within the first 24 to 48 hours. That has not happened, so that will be filled up much later. And I'm of the opinion that we have got very strong headwinds for Nasdaq to go up further. And therefore we have got, whenever we encounter the resistance like the 20-day exponential moving average, which is this yellow line out here, which is sitting at 290.04. Right now we are at 284.85. So those resistance are going to be much stronger. And even if we manage to break the 20-day exponential moving average, we still have 292.96. Having said that, I want to go and have a look at the VIX. I want to show you that the VIX has not crossed this 39.91, almost I would say a 40 level before. This is 40.03 level. So whenever it has crossed the 40.03 level, it has been able to come down, and we had seen much better markets. Right now we have not gone anywhere near 40, and therefore we are making a trend line and consolidating towards that. That is my opinion. And once we cross that 40 and then come down, that's when we would have had seller capitulation. The market will be cleanly wiped out of people and their positions where they would have bought the stock at a much cheaper price and they still have a little profit left. When we cross 40, what's going to happen is all those people who had long-term investments had been seeing their profits go smaller and smaller are going to panic and then sell out to book at least the remaining little profit that they had. And all that is going to make the VIX go above this line here at 40. And once that happens, the share prices are going to fall really, really hard. And once the share prices fall, I think they are going to come somewhere closer to, let us go to QQQ. They will come somewhere closer to 253 in my opinion. And that is where I think we'll find the bottom for the market. And once that happens, and the market comes to the bottom, all those long-term investors who had held shares for maybe 5 or 6 years and had seen a huge accrued profits drop down, and who had to sell with very marginal gains in order to preserve their capital, are going to want to come back in immediately. So they will be the early bird purchasers, and they will start the bull run. And then they will form the base, because they are not going to sell for the longest time like they did before. And that's when people will start moving into the market, because a floor would be set, the capitulation would have happened. And I think that's not going to happen, at least in the next couple of months. And what will catalyze that to happen is going to be dovish Fed. And I want to show you the poll that we had among our community. Of course, there are only 12 votes. I encourage all of you to go in and vote there. But among the 12 votes, most of you feel that the greatest risk to stock market is the Fed interest rate hike. Once this is taken out of the equation, the market is going to be more bullish. And how will that happen? That will happen in a couple of months, or maybe 2 to 3 months, where after another 75 basis point increase, the demand destruction is going to show that the inflation has come down. When the inflation has come down, that's what JP Morgan is saying. Inflation will be down at least half to where it was, and we are going to go up. Then we are back to our original thesis of one more quarter of really bad market, but the fourth quarter being a pickup. We'll come back close to that. So I think we need to cross this 40. So this is my long-winded commentary. Sorry for the delay in taking you to the genomics, but this is what I think is happening out here. So today is going to be bullish, but as I mentioned before, we are in this big bear channel, and we have heavy resistances. So anytime the market can turn around. And I have a special word of caution for our community members who have been swing trading or day trading in this market. You will definitely make money when there is a bullish trend going on. A bear market rally can also help you to make money, but now is the time to be extremely careful, because whatever you made can be taken away very, very quickly. You could get stuck in a call that you have sold because the share price has fallen significantly, and your call, which was in positive, in the money, is going to be deeply out of money. And you might have to give up all the gains that you made. So now is the time to be extremely careful, in my opinion. Of course, these are not financial advice. This is just my personal opinion. Please do your due diligence. And if you're dealing in options, you better know what you're doing, because the market is very volatile. And also swing traders and day traders, be very careful. You might be trapped into a situation you have to wait until the fourth quarter of this year to take out your money. And at that time, you will be so desperate to take out your money that you would not have the perseverance to hold on for another few months and take the mega returns that you deserve. So be very careful. Don't put all the money that you have into the market. Do some dollar cost averaging. Just manage your risk carefully. With that said, let's go and have a look at our genomic stocks. When it comes to genomics, I would like to start off with NTLA. So those of you who are following NTLA, this is important news. We had a range bound trading before, but you can see that NTLA has gone up, and today it's going to open up much higher than its close yesterday. It's going to be opening at 52.66. This is pre-market stats at 8:13 a.m. And that's a big news for NTLA. And the news is that NTLA Therapeutics, Regeneron report positive data from NTLA 2001 study, and this is going to boost the share price for NTLA and Regeneron today. So that's going to be a pop. And as always, it seems that some people had advanced information, so they pushed the market up until we came to the 50-day exponential moving average at 50.59 yesterday. And today, pre-market, we are already up to 53.20. So this is good. This could be a trading opportunity for anyone who is looking at it. And then let's go on to DNA, which was the biggest gainer yesterday, and we are still within this range. Once we reach the 50-day exponential moving average, or once we reach 3.20, we are likely to push back down again. Let's look at Verve. Verve is again up 14.75 as of yesterday. And today, pre-market, there are no trades. Invitae is up 3.56 pre-market. and it had gone up yesterday also. Let us have a look at the news if there is any. There is no new news out here. PACB is still within the range that we have here, and pre-market it's up 3.85%. Again, I think that it's going to hit this resistance here, which is very strong with the 50-day exponential moving average, and then it's going to come down. Editas is up 11.60 as of yesterday, and this morning before the market opened, pre-market it's up 3.70% and sitting at 14. So I think we are going to have Editas moving into the next level of consolidation, which is going to be between 13.14 and 15.37. So that's the range in which I think it's going to move. MACD is strong. Momentum has got plenty of runway before it becomes overbought. So Editas is looking good today. NTLA is up 11.46 as of yesterday, and this morning it's up 4.81%. So I think NTLA is also going to move into a new level of consolidation with with this line out here, 49.68 being the floor, and with 56.47 being the ceiling. So we'll be seeing NTLA move into this range of consolidation. It could move even higher depending on the reaction of the market to the latest news that we have here, which is what I read earlier for NTLA 2001 study coming up with positive results. Then we come to CRISPR Therapeutics. CRISPR Therapeutics has managed to bounce back again. Pre-market, it's up 1.09%. So I'm going to just move this line of support out here, and it's becoming much more sustainable when I look at it this way, because it has got 3 touch points and it's at a much less steeper angle. This 45 degrees, a smooth upward trajectory for a bull channel, and it's more sustainable. And we have got a MACD which is bearish and which is trending towards the signal line. Momentum is above average and picking up, and pre-market we are already up 1.09%. So I'm thinking that this severe drop that we had here was an overreaction. We are going to try to go up, and our challenge is going to be this resistance out here at 66.36, and we are very close to it. So if we manage to break through 66.36, then I think we'll recover the losses we had 2 to 3 days ago. And then our next resistance is going to be this red line out here, which is at 73.70, and it forms the 200-day exponential moving average. Once we cross 200 SMA, things are going to look much better for CRISPR Therapeutics. Now I look at Bluebird, which is the sole share that is doing negative after having gone up significantly for 4 days. It is doing negative, and today pre-market it's at 4.26, that is around minus 0.47% down. MACD is bullish and momentum is above average and pointed down. So I think that Bluebird is going to consolidate at the next level with 3.75 being the floor. And we'll have a resistance out here from the 100-day exponential moving average sitting at 5.13. That is my expectation. And as we keep on consolidating, the 100-day exponential moving average will keep on stabilizing and going horizontal instead of sloping down. So that's the trajectory I see for Bluebird. But overall, I think today is going to be a bullish start. But remember, we are in a bear channel, therefore this bear market rally or a relief rally, and it could turn around anytime. So you have to exercise a lot of caution in the market today. With that said, I would like to end this session, and I hope you all have a great day. And this is a Friday, so I'll be busy with my next video for you for the weekend. And I hope you all have a great day. If you had liked this video, please press a like out there. It helps YouTube promote our channel to new viewers. And if you're not yet subscribed, please subscribe and join our community and help us grow this channel. And if you're already a subscriber, please go to the communities tab and look at the polls and look at what your fellow community members are thinking about the markets. I'm putting interesting polls out there so you can gauge the sentiment of the community and align your own sentiments along with that and validate it and see how things are moving. With that said, I'll catch up with you again in the next video. Bye for now.